So I think for China, even for the past few months, we see the deviation between some of the good fundamental side in terms of, China is one of the few markets globally that don't suffer from an inflationary problem and have a bit more room for monetary easing, so to speak. And also, even in terms of earnings downgrade, since second half of this year, we see the consensus earnings downgrade for MSCI China has slowed down. For some of the major sectors, like the internet sector, we've seen upward revision in earnings, right? Because companies were able to manage cost efficiency. However, on the other side, top down, there are a number of headwinds, right? The biggest thing on people's mind continue to be the COVID policy and, the lockdowns, which lead to a lot of uncertainty in terms of economic outlook, earnings outlook, and consumer confidence. And also globally, the geopolitical tension remain escalated. The tax decoupling seems to be, extending because of the U.S. recent semi-bans. So flow-wise, investors have been very bearish on China. We've seen a lot of flow selling, positioning selling, especially in those well-owned internet names, those names popular among foreign investors. But on the other side, after last week, just some unverified news, rumors about potential reopening, Hang Seng Tech Index was able to rebound like 16-17% in a week. Right. So at this moment, I would say a few things. One, be nimble, right? Because the market could be very binary depending on the direction of reopening. Secondly, we've seen investors play the market through, option derivatives, right? Buying call options on the Hong Kong market. Third, for longer-term investors, we still think that, medium-term perspective, the more alpha generation are in the Asia mid-small cap companies in the good sectors such as the green economy, advanced manufacturing, hard tech related sectors. And interestingly, recently investors also start to ask about SOE basket because some people feel that might be a way to diversify the risk and have a more defensive play for the China market.
And defensive would mean what in this environment?
Yes. So defensive, in this market means that probably value stocks, right? Even year to date and last year, we saw energy stocks outperformed. Generally, the cheap high dividend yield stocks, including the China banks, outperformed. And also defensive probably means, avoid the very crowded names, especially those names very well owned among foreigners, which we've seen recently suffering a lot of the underperformance despite fundamentals. And finally, I say, defensive in the sense that buying the stocks with long-term fundamental stories, right? Like I mentioned before, the green economy related sectors, the little giants, they are well aligned to China's policy priority in terms of energy self-reliance, technological development, import replacement. So these sectors will be more likely to produce companies that can generate long-term secular growth, and investors may be able to hold through the short-term volatility.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.